let's take a look at some of the key charts from the latest Bitcoin article on Brave New Coin. So Bitcoin is a pure proof of work coin, the OG, the original, the one that started it all. Bitcoin's hash rate and difficulty have continued to increase since 2019, basically making new all-time highs almost every month. You can see in and around halving, hash rate and difficulty become extremely volatile as mining profitability takes a big hit, especially if price doesn't compensate for the differential in the decreased block reward price or fees. So what we're seeing now, I think, is with price stability, mining profitability is becoming a little less volatile, and so hash rate itself is becoming less volatile. Additionally, we've had 5 new ASICs released this year, 2 more set to be released in October this year. So all of this is just a bunch of churn from old ASICs to new ASICs, inefficient technology to more efficient technology, and you're seeing that sort of play out in the hash rate difficulty diagram here. We're currently at an all-time high for difficulty, approaching an all-time high for our hash rate, with a predicted plus 7 or 8% within the next 10 days to lock in for that new difficulty period. So hash rate is cooking for sure. If we look at transactions per day and average transaction values in the fill here, average transaction values haven't changed much since early 2019, really mid 2018. For the most part, we've kind of averaged between 5 and 10K, which is fine. I mean, by itself, I always talk about average transaction values. It doesn't really mean much unless there's extreme outliers, like there was here. This typically indicates local highs in price, usually. Usually it's whales moving a ton of coin, pushing price down. We're not really seeing that here. Transactions per day have been extremely volatile with hash rate over the past few weeks, past few months. They're again recapturing the local high here. So all this is more bullish than bearish from that front. Again, fees are basically sitting at the post-2019 low and haven't really exploded any recently, except for, I think that was March 12th when price went insane. Anytime there's price volatility, there's always going to be a demand for block space because there are people who are FOMOing in. There are people like the whales I mentioned who are trying to sell as fast as they can. So that's all going to affect fees. And it's a dynamic system, so if there's more demand, price goes up. Looking at active addresses in the fill here and NVT in the line, you can see NVT is at an historic upper third period. It's at a high here. You want to see it declining. This is bullish. The rise since 2016 is potentially related to inflation as well. There's a general uptrend since 2016. So if this were inflation adjusted, it would probably look different. Active addresses are near all-time highs, much like they are in Ethereum. The daily active, this is the monthly active addresses here. The daily active addresses have exceeded 1 million several days over the past couple months. So that's always bullish. We don't exceed 1 million. That's a rare number for BTC. So it says that there's a lot of on-chain demand right now, for sure, even though price is doing absolutely nothing. Cme is one of the largest institutional places to trade BTC. This is all paper trading, so there's no actual BTC involved here, but the swings in price for Cme definitely affect the spot markets for BTC. So volume has continued to decrease since May. You're seeing that across every spot market for BTC right now. Open interest has declined slightly. My guess is that rolling into this July 31st expiry, volume's going to prop up big time, and OI, something's going to happen with OI. It's hard to tell until after the fact, but right now it says there are a lot of people involved on the OI side historically. We don't really get above 400 million open interest sustained on Cme, at least we haven't historically. So there's definitely a lot of open interest around that can move price significantly if these positions go in the wrong direction. Let's look at technicals, 50, 200, yearly pivots, Bitfinex long-short ratio, VPVR here, volume, and RSI. So Bitfinex long-shorts have really been unremarkable over the past 4 or 6 months. Really haven't changed much. Nothing to say there. They're net long, which isn't crazy. Historically, they've been net long for the past couple of years. VPVR shows plenty of support from the downside here lots of support at 6.5. You know, it's funny, these volume supports, we thought that it would matter a lot when we returned to 6.5, that this would be massive resistance. It wasn't. It was support here, but then it wasn't support here. So it's hard to really know when to take this volume support seriously. If anything, it just says historically this was a key area. Same thing with 8.2, I think that's what this is on the yearly pivot. So there's lots of supports if this should fall, which I think it will. Right now it's leaning bearish as it consolidates. 50 and the 200 might cross bearish. We might tap the 200, we might tap the yearly pivot. We might tap 7.1. I doubt we go to 6.5, but you know, if this volume explosion happens, it's probably not going to take much to get us down $1,000 very quickly. RSI is in the middle. Milk toast, no real bullish or bearish anything here. Looking at the cloud, this is really why I'm leaning bearish. TK cross is bullish, which says any long opened here should be closed now. Any long period, any long entry, new long entry, will take a bullish TK cross. So right now, this says wait for the short, more so than it does wait for the long, because as this enters the cloud support, the target for that is 7.2 area, the other edge of the cloud, hence the edge-to-edge trade. These don't happen too often on the daily, so when they do happen, they're important to pay attention to. They usually happen maybe once every 6 months. They have an 80+% hit rate, or expected target rate, backtesting, however you want to say that. 80% of the time, they do reach the other edge of the cloud. So they're worth paying attention to. You know, there's a mini one here, there's a mini one here. That's not what I'm talking about. These big ones rarely happen like this. And it's leaning bearish, you can't deny it. You know, if it breaks 9K, that's really all it's going to take, I'm expecting. And that drop to 7.1 or 8.2 fits in with this potential inverted head and shoulders with the target matching the left shoulder, creating a right shoulder here around this green support zone. And towards the beginning of Q4, so by October, I'd expect us to be right back here to 9.2, 9.5, whatever that is, if this pattern is real. And then Q4 historically has been a good quarter for BTC, bullish. And then lastly, just looking at that CME rollover period again, July 31st is go time. So it's typically a few days before that when the positions, the tectonic plates, if you will, start shifting in the market. If you look closely at all these dates, there's generally higher volatility leading into these rollover periods or immediately after the rollover period. It's typically before, it's typically 2 to 3 days before, so like the Wednesday, 2 weeks from now, July 27th or something, I don't know. I'd expect the move by then for sure, we'll know. This may look really wonky if we drop to 7.1 and then by August we're back up to where we were, you know, like that's possible. We've seen that before, you know, you get these big dips in and around these rollover periods, right? So it's just a wait and see. When we're on the cliff's edge like this, it's leaning bearish, but it's closer to a coin flip than anything. But as we start to droop without momentum, then people start getting nervous, positions start getting closed, shorts start getting opened, and whales start moving coin to exchanges. And that sort of tips everything and finalizes the direction. So I'd really be careful. Me personally, that's what I'll be watching is for the short side and the short entry to confirm sometime this week with a breach below 9K.